Hi, this is Scott Murray. Welcome to the Daily Economic Market Shout for Wednesday, May 31st, 2023. It's great having you with me today. And what did we see in the JOLTS number? We sold it, jolted up, right? Expectations for everyone was in the 9 million area or below. 10 million was the print. So what are we seeing? What does that tell us? It's expectations. Remember, this is April's numbers, but it's telling us not much change going on because we see in there healthcare, retail, business services. Those are the categories doing well. 2 out of the 3 are pretty high salary categories. So we would continue to see pressure on the wage component moving forward. And the fact that there are these many openings and people are quitting. Remember what we saw at an EDP last month was that around 13% increases for people getting new jobs, 5% for people continuing on what they're doing. So there's an incentive to move. People will move as long as people see opportunities, And so the quits are very important. Yeah, a little down 50,000, but not significantly here. So this expectations of higher job losses, concerns about jobs being plentiful are not actually going out into the numbers. Not particularly surprising because consumer kind of hears the top line, concerns about debt ceiling, concerns about recession, concerns about inflation, and they're worried. And so when they're asked, when they get pulled something, they respond. Real measure is how people are quitting, because that's actually a commitment that they're making, and getting a new job, which again is a commitment that they're making. And so the economy continues to try to hire enough to kind of keep up with that separations. I think that is continuing to be the story out there. If there was this pending doom being seen in the numbers, it's not there yet. Claims, where have claims gone? Claims have gone lower. I've talked frequently here about the non-seasonally adjusted number and why it's much lower than the seasonal adjustment, and we've moved down to 1.6 million on the continuing claims number. Those are encouraging signs. When we went through the last expansion, 1.8, 1.9. Now we're not even there yet, and we're sort of worried. So when Friday comes, clearly any number could be printed, and we're still seeing the active market. So one print week would not be terribly surprising given the strength that we see. So when we look at this number on Friday, we're likely to see an upward side surprise or upward wage surprise. So this will continue to put pressures. Yes, we've continued to hear the hawks. Cleveland Fed is out on the tape today talking about how we're going to need more rate hikes. Conceivably, know that this current situation of rate hikes hasn't really taken the toll on the job market. The Chair Powell said it was very solid. That's actually even a quote from the minutes of it. And so we don't see any denting going on right now in the JOLTS number or other numbers we're seeing out there. Does this mean they're more likely to hike? I think they want to see the inflation numbers. The first day of the Fed meeting in June is going to be on the inflation print. So they will know that information as they go to meet. If we see some deceleration, then I think that'll be kind of the all clear sign. Still random out there. We have seen at the beginning parts of production some higher inflation. So there's the off chance we're going to see risks to the high side of that number. But for the labor market today, but not signs we're seeing out of claims, out of the internals, out of JOLTS, or even what we expect to see tomorrow or the next day from ADP and non-job payrolls is it seems to be pretty solid. And again, I think that will encourage the spending. And when you look down into the confidence numbers, you see spending continuing to be high, people wanting to buy cars. And so that's telling you at the end of the day how it's affecting their pocketbook is not as much as their worry is. This is Scott Murray for the Daily Economic Market Shout. Thanks for joining me.